the red to green move, which is what I would have been trading on this stock, and if you look at the option, what happened to it, pretty crazy. So in just simple stock buying terms, it went from 5 up to almost 580, so almost a 20% gain. And I didn't always trade options on this red to green move. In fact, I almost never did, until I realized that you could greatly increase the amount of profits doing so. Those of you guys who have been here for a long time, when I would full time just trade shares of Tesla, we traded this move all the time, and we made a lot of money on this move just leveraging shares because you could leverage a lot on Tesla. Now, the simple red to green move is it's just green on the day, and then it starts red. However, there's some keys to it. The more green it is on the day, the more harsh that move is when it goes red. For example, at one point, SPY was up over 1% on the day. That's pretty solid. It's not terrible. It's a pretty solid start to the morning. And then what happened? It gave back that entire 1% move, and then actually is now, at one point was almost 0.5% red. So you can see it was a pretty good move. If this was up 2% and it did that same red to green move, it would have been, usually speaking, 2 times as powerful. Reason being is because it gives traders that much less confidence that that stock or ETF, whatever you're trading, is going to end green on the day. If it was so high at one point, it's up over 2% in the day, and now it reversed all the way back down, odds are it's going to continue to reverse. We see this on penny stocks. A continued momentum play is where you see the red to green move happen most. For example, we'll go over SONN for now for an example. So hypothetically, say if SONN closed, it held this level, closed at 260. Okay, so if it ended up breaking 260, that would have been a great red to green move play. It was currently red on the day. We see this happen a lot. Even though it's up a lot in the last 2 days, it's technically red on the day because pre-market sold off a little bit. And so what you want to do is buy. I usually buy roughly with anticipation of the break. Now, it depends how volatile a stock is. Usually I do it when it's about only 0.5% red to 0.25% red. And then I look for it to test the break-even spot and then just rip right through it and then be green 1, 2, 3, and 10% in the day. The more it's hypothetically, if it sold off that much and actually closed at 270, the more it rallies to end green or go green, the better the move ends up being. Traders have more confidence that this is going to continue to rally if it has a lot of strength pushing into that level. For example, if it closed at 270, and it opened today at 265, and it pushed up to 270, it only made 5 cents a share, so like almost a 2% move. That's not that great on a red to green move. It's just kind of consolidating around that level. It's not something I would really look for, to be honest with you. And a lot of traders really wouldn't look to trade it. Likewise, if it closed at 270 and it opened at 275 today, and then it went down to 270, it wouldn't flush immediately down to 220 more than likely. It just wasn't that big of a steep fall. Now hypothetically, if it closed at 270 and it opened at 350 or 325, and then it now fell down to that 270 level, odds are it's going to continue to flush down just as hard because it's showing weakness that it can't hold the green level on the day. And that's the simple red to green move. I do have videos in the course, guys, for you to go over it. I really, kind of scripted out. I have a sketch pad. I'm really bad at drawing, so it's a hard watch. I'll be honest, very hard watch. but the red to green move can be amplified through options. And that's one thing that I have just started doing. This is ABOS, okay? And this was a super good red to green move. So we traded it the day before. You see this, like I said, a lot in continuum momentum plays. And it closed at around 9.42, just under the $0.5 9. Okay. And what ended up happening was pre-market, it sold off pretty aggressively. Now, thing about this one was it got rejected by that red to green move twice before it really started to break out. This one was a pretty interesting play. You can see that it acted as a support and or resistance line right here and right here. And then once it broke out, it actually validated it once again. And that confirmed traders' beliefs that this is going to make a move higher. People are buying the dip off of the red to green move level. They don't want to see this go red. They think this is going to end green in the day. What happened? Went from 9.44 and rallied all the way up to 11, almost 11.50. Solid play. And that is the red to green move in a nutshell. Like I said, you see this very likely. It's very common on continued momentum plays where if I draw it out here, makes a move to the upside, and then pre-market or after hours pulls on back a little bit, and then as it creeps up to that previous level or close level of the day prior, you see it usually have a super solid breakout and continue higher the next day. Very common. I see it a lot. I'd love to give you more examples, but I can't think of any off the top of my head. Now that is off of the small cap side. I trade this a lot on Tesla, and I used to have price targets of percent intervals on Tesla. But as I continued, so for example, I would buy when it was 0.25 red, and then I'd sell half when it was 0.5 green, and then the next one would 1% green. That used to work. However, the more I traded it, I realized that wasn't the best method of doing it. After buying for the break of the red to green level, I then use psychological resistance and support lines to gauge when to sell, when to lock in profits, when in whatnot. The only thing I use the red to green move level or the percent interval after I'm actually in the position is when to stop out. For example, if the stock goes green, say 1% on the day, and then what ends up happening in this scenario was it dips back red 0.25 0.5, that's when I stop out and cut my loss. But that's it. When it comes to locking in profits, I don't usually use because no trader, I hate to say it, but no trader is going to be like, oh, it's 0.5 in the green, time to lock in profits. It's 1% in the green, that's a psychological resistance line. It's not really. So I found it's in my best interest to just stick to said psychological levels, such as like whole numbers and stuff like that. So that's one thing that if you go back and watch the lesson, I'll probably start preaching you on that. Years down the road, I don't mean as much, and I probably should reshoot that lesson here in the near future. But with that being said, team, that is going to do it for today's group lesson, today's trading session. I tried to trade the green to red move on SPY. Would have been a nice gain. I unfortunately could not. I'll have to talk to TD about what's going on in my account. SONN took 2 trades on it. One off of the retest of 250. And then I saw a big seller at 255, flattened the second I saw it. It was a 30,000 share seller. That's enough to make the stock go down. And then I bought off the break of the high of yesterday at 270, bought again at 275. I sized up on it. I thought there was opportunity there. I love the setup. I love the setup a lot. It rallied up to $3 instantly, up $3,000, looking for the break of $3. It had a micro pullback down to 290. That 295. That micro pullback down to 295 became 290. 288, 285, 283. I'm thinking I gotta lock in some profit here. This is gonna reverse. There's not much hope for this bouncing anymore. Locked in half profit, and then the other half I caught at break even, which resulted in only a $700 gain. Not a terrible way to start the month. I'm up $750. Like I said, if I were to just walk in a day and take a little Tesla scalp and make, $1 a share, 70 cents a share, and off 100 shares made $700, I would have been happy as a clam. But the simple fact that the unrealized profit was so much greater than what I actually came out with, it really kind of taints that profit, that feeling a little bit. So that's going to do it for the day. Is there any questions? So basically when it breaks under or above yesterday's close, correct? Yeah. So what is the red or what is the green level? It is simply what it closed at the day prior. That's it. And that's how you can trade it. Remember, the greater the move to the opposite direction it makes, generally the better the move to the downside it makes, or said upside. For example, I already went over it. You guys know what I mean. Is there any other questions I could go over on the red to green move?